I want to explain to you why an altcoin that I personally own, and you probably own, has some potential challenges that it's facing at the moment, which could significantly hamper its ability to grow. And then at the end of the episode, I want to show you a new opportunity which could handsomely reward buyers. This is going to be one of the most interesting conversations that I've done on the show in a long time, and I think it's one that's very well worth having. Let's get straight into the show. I'm your host, Miles. Welcome back to the show where we go live every single day at 6:30 p.m. EST to discuss everything DeFi in crypto. Before I get into the juice of the video and the coin that you guys want to hear about, I want to give you guys a quick market update because this morning, Bitcoin broke 42K. It looks like we were full steam ahead to testing the 43K resistance. However, we did come back down a little bit still, but the market is showing some signs of green over the last hour. I want to make it clear that this video isn't about a market catastrophe. It's about one coin in particular that I think a lot of you will be interested in hearing about because you probably own it. And I know I personally own it, so we have to talk about it. But here's my take on the current market and the current state of the market at the moment. Rand did a tweet today which resonated with me. He said, "We are at the lowest point of retail interest in the last 10 months. Use that info as you will." And I agree. Basically, all the metrics that I'm looking at suggest that retail are almost completely out of the market. When we look at things like YouTube views, Twitter engagements, when we look at all sorts of things across the market, flows in and off exchanges, we can see that the retail participants have actually left the market. Now, not all of them have left, but a significant amount have left. So having the retail interest this low suggests one thing to me, that we're closer to fair market value now than we were before. Now, what's interesting is that the baseline price now, so the price of Bitcoin at the moment, is much higher than it was last time we had this level of retail interest. So that suggests to me that we have a lot of institutional money, a lot of smart money actually driving the market at the moment. And right now, it isn't being as much driven by retail speculation and hype like it has been in the past. So overall, it is a positive for the market that a lot of these retail participants have exited. And the fact that you guys are here holds you in very, very good stead because you're continuing to learn in a somewhat boring market. And you're continuing to learn whilst the institutions are pouring in money. Trust me, guys, I went to the Bitcoin conference. I was speaking to a lot of institutions, fund managers, etc. And the interest has never been higher, honestly. Anecdotally, the interest is very, very high. But I want to talk to you guys about this coin that is referenced in the thumbnail of this video. And I'm going to tell you what it is right now. And because I did a poll earlier today, and I asked people if they held any AVAX, and 53% of people said that they did. So I want to talk about AVAX today. And AVAX is the project that I want to talk about that I have significant concerns with. And I want to discuss within all of this drama, a very solid play that I want to share with you. So make sure you stick around and hear this narrative because I think it's very interesting. And at the end of the video, I'll be showing you a play off the back of this, which I think could be potentially very, very lucrative for holders. So let's go through a thread that I did the other day. And this is what sparked my interest in this conversation. And it sparked quite a large Twitter debate across my feed. And it's one that I think is very, very valuable talking about because I had the head of Ava Labs chiming in. I had the head of DeFi at Ava Labs chiming in. Basically, everyone in the industry was all discussing this topic a couple days ago, and it's a very, very relevant one for AVAX holders and also holders of this other narrative that I want to share with you at the end of the video. So let's get straight into it, and I'm going to do my best to justify my thoughts on this subject. So I love AVAX, I'll be honest. I think the tech is awesome, but I do have a real concern. Now, this concern stems from Crabada having such a large percentage of transactions on the AVAX network. So currently, if you're not aware, Crabada accounts for 64% of AVAX's weekly transactions. Next month, it's getting its own subnet titled the Swimmer Network, which means TUS, Treasure Under the Sea token, becomes the native gas token of the network instead of AVAX. So currently, whenever a transaction takes place on Crabada on the Avalanche Network, the transaction is processed using AVAX. So AVAX is the gas token which powers the Avalanche network. And every time a transaction takes place, AVAX is used to pay gas. On Subnets, the network is powered by their respective utility token. So the DeFi Kingdoms subnet is powered by Joule, and the new Swimmer network on Crabada is powered by TUS. So from an outsider's perspective, I think this could be a very big concern for AVAX as it reduces the amount of AVAX being burnt and feeds transaction volume away from the primary network. So let me justify myself here and give you more of a picture as to why this impacts the network. So Crabada, if we look at the last 24 hours, did 476.1 thousand transactions. That is absolutely massive for a play-to-earn game, and it's probably the biggest in crypto right now, maybe after Splinterlands, in terms of daily transactions. Now let's go on to the Avalanche chart, and we can see that the daily total transactions are 800K. So Crabada has 476,000 of AVAX's daily transactions, and AVAX has a daily transactions of 800K. So Crabada is making up 64% of AVAX's total transactions. 476,000 out of 850,000 is quite a large percentage. So it got me thinking about how this potential new network could impact Avalanche. So if you guys don't know, the Swimmer Network mainnet is coming out on the 9th of May. The Swimmer Net is a new subnet which will be used to power the Crabada game. So Crabada is actually migrating off Avalanche and onto its own subnet, which has positives and has negatives. But the one negative that I want to discuss right now is the fact that the gas token now shifts away from AVAX onto TUS, which does a couple of things. The first thing it does, which is positive for the AVAX network, is it relieves congestion. If you guys have seen the gas fees on AVAX at the moment, it's absolutely ridiculous. And no one wants to pay those sort of gas fees. So the one good thing it does for AVAX is reduces the cost of gas fees on the network. But the negative thing that it does is it feeds transactions away from the network. And now there's less burn, less supply burn on the AVAX token because the TUS token will now be used to burn on the new Swimmer network, which means less AVAX is going to be burnt every single day. Now, could this balance out by new users using AVAX because the gas fees will now be cheaper? Potentially. But this is the question I'm asking in today's video. Are you convinced that the easing of the congestion on the AVAX network will outweigh the amount of transaction volume that they're about to lose? So on a positive note, each subnet validator, and this is a crucial piece of information to understand Avalanche, each subnet validator must still validate the primary network Avalanche. So for the Swimmer network to launch on Avalanche, it actually needs to hold Avalanche tokens in order to validate the primary network. So it's not like the use of the Avalanche token has been completely removed, right? So this gives AVAX the ability to scale in a manner not many other chains can, because these subnets do relieve congestion off the network, and it's also bullish for AVAX as a whole because it allows them to scale in a more positive manner. But here's the main point I have in this video, and this is what I want to ram home, and I'm going to show you a play off the back of this which can be beneficial. Maybe it's a course of short-term pain for long-term gain. So that Avalanche acquired a lot of users through Crabada and through these GameFi ecosystems, which is positive because anytime that you can onboard new users, that's a good thing for a network. But they're going to lose some transaction volume now that some of these chains, like the Swimmer network, migrate onto their own subnets. But subnets do require AVAX tokens at the same time to validate the network, so that can be seen as a positive. So in order to get an idea of how this will impact AVAX, positive or negative, let's have a look at what happened to DeFi Kingdoms on Harmony and how it affected Harmony 1, because it's probably the closest example right now that we have to something like this taking place. So we saw the Harmony 1 TVL absolutely rocket. DeFi Kingdoms almost took up 60% of the TVL on Harmony and was one of the major components of the Harmony 1 blockchain. Now on March 30th, DeFi Kingdoms actually got its own chain and it launched its own Crystal Veil network away from the Harmony chain. And what this did is it took a lot of TVL away from Harmony. And we have seen a decline across Harmony 1, if I just zoom in a little bit now, over the past month as people migrated off Harmony onto the new DFK blockchain. So I do have an opinion here. And my opinion that is in the short term, AVAX is going to lose some users. That's just a fact, guys. Whenever you have 64% of your transactions happening on a chain and that's then taken away, you're going to lose some users. That's just an inevitable part of this cycle. But the AVAX guys, they chimed in. They weren't happy about my tweet. And I want to take an objective approach and look at the positive and the negatives for AVAX. You guys know now that there's a negative, that AVAX is going to lose a lot of users. But let's look at the positive for the network, and then let's look at what you can do to get involved. So the positive for the network, and Emin, who is the founder and CEO of AVAX, he chimed in and he actually retweeted my tweet and offered his thoughts on the token dynamics. So as I said before, to own a subnet on Avalanche, you need to hold 2,000 AVAX. So the Swimmer network, just having permission to use AVAX as infrastructure, is going to need 2,000 AVAX tokens. So conservatively speaking, there could be thousands of subnets that launch on AVAX over the next few years, which will mean that will increase demand for the AVAX token, as that will all need to verify the network with validators. Subnets that run on their own tokens will need to provide liquidity for their gas tokens. So TUS will also need to provide liquidity in the form of AVAX just to use their gas token on the network. So that is one way they're alleviating the sell pressure of AVAX from Avalanche's side. In a competitive market, validators will demand payment in AVAX. So this is a bit of speculation here. Amin thinks that validators are going to demand AVAX in the future. And he said it many times and he'll say it again. The winning chains will be those that can accommodate the explosive growth that we all believe is coming, whose beginnings we lived through. So basically, my take on what he's saying here is that more subnets on Avalanche equals an increased need for AVAX tokens to validate the primary network. This decreased transaction volume will also free up the network as it reduces gas fees whilst freeing up block space. So we are going to see the gas fees on Avalanche decrease. We're seeing fees of like $10 at the moment, which is very high for Avalanche, honestly. And it's deterring a lot of people from using the chain. And it's a big, big problem. But they're going to free up block space now that a lot of the transactions go off the network and onto the Swimmer network. So there's positives and there's negatives. Luigi, who's the head of DeFi at Ava Labs, also chimed in. He said, 1, the block space will have more demand. 2, there are many subnets that will burn AVAX as a gas token in the future. Now, this is the main point, I think, of the AVAX bull case. Many subnets in the future aren't going to go with their own tokens like TUS. They're going to use their own tokens, potentially AVAX, as the gas token in the future, which will increase the burn on AVAX. So here's my thesis from all this. Because obviously there are positives and there's negatives to what I've just explained. And there's a lot that we need to go through in order to verify, should you keep holding your Avalanche? Should you buy more Avalanche? Should you be shorting Avalanche? I mean, these are all questions we have to ask. So let me just explain right now how I think this might play out. Short term, I'll be honest, I'm not sure Avalanche has that much room to run. And I'll be completely honest, because regardless of how good the tech is in an ecosystem, the reality is that crypto still relies on hype cycles. Now, a lot of hype goes into backing up crypto prices. And the fact that AVAX failed to test highs even during the midst of the conference that they had a couple of weeks ago, even during the midst of a huge subnet narrative, it does worry me. And now, AVAX is not alone. I'm not hating on AVAX. It's one of my favorite projects. A lot of projects have struggled during this time, but there has been a lot of bullish catalysts for Avalanche, and it still hasn't failed to test its highs, even with all those bullish catalysts. So that is one of the negatives. Also, the other negative I would say on the Avalanche side is that its fully diluted valuation is $56 billion. That is quite a large FDV. And it puts it well in the top 5. I think that's a higher FDV than Solana. It puts it in the top 5 of crypto. So you guys have to realize that the bigger a coin gets, the harder it is to do multiples. So for Avalanche to get from its current levels of $80, let's say it triples to $240, this means it would need to hit a fully diluted valuation of over $170 billion. Now, a $170 billion market cap just for a 3x is massive. I mean, it would put it third behind Ethereum for market cap in crypto. So you have to remember that the bigger coins are, the harder it is for the coins to do multiples. So I do think that this Crabada network, these transactions going off Avalanche, are going to cause some short-term pain, because I think whenever transactions leave a network, there's going to be some panic. When people see the transactions going down, there might be a little bit of panic overall, right? So I do think that short-term, the Avalanche price may not perform that well. That's my honest opinion. But here's the thing, and here's the major caveat to this. Long-term, I think this could be better than ever for the Avalanche network, because subnets are easing the congestion off the network. They're freeing up block space and they're making gas cheaper. So as I explained before, the main issue with AVAX is that the gas is so damn expensive. The gas, I mean, basically this guy said AVAX is ETH with a different name now. Like it's AVAX gas is just crazy, right? So in order to kind of alleviate the pressure that's being put on the network by games like Crabada with massive transaction volume, having these subnets means that they can lower the gas fees. And it means that they can implement more utility for the AVAX token later down the line. But there will be short-term pain. And that's why I don't think Avalanche will perform well over the next few months. Now, I may be wrong, but I'm just looking at what happened to DeFi Kingdoms. I'm just looking at what happened to Harmony One. And I'm looking at what happened to Phantom when its transactions dropped. And I'm putting a few trends together, and I'm seeing there might be some issues at AVAX. And honestly, I just want to say that this conversation that I had on my Twitter was probably the most productive conversation I've had in a long time. I had the head of Avalanche. I had a lot of people in the Avalanche ecosystem all chiming in and giving some great insight into AVAX. And it was really, really productive because I learned a lot about the technology and I learned a lot about the positives and negatives. But I know you guys want some alpha and I know you guys want something to buy because we're that kind of channel here. We always want to be making moves. So I'm going to show you something that you can do to take action right now to play this narrative. Something that I think can perform better in the short term than Avalanche, but something that is still involved with the ecosystem that I've been talking to you guys about today. I'm going to reveal that in just a second. But before I do that, I want to talk about one of the main show sponsors, ByBit, because we're doing a giveaway at the moment, which I think you guys are really going to like. So ByBit is one of our official show sponsors. And if you sign up to a ByBit account today, using the link in the description, we're going to double your portfolio if you win. So we're going to pick 3 lucky winners, and we're going to literally double your portfolios. If you sign up using the link in the description for a ByBit account, make sure you use the link so you're eligible. We might double your portfolio, and I'll be doing it live on the show over the next week. I'm literally going to be giving out free money. So if you guys like free money, why not sign up to ByBit? Why not get involved? And let's get back into the show. So I have a play here that I think could be quite good. And it's an obvious play if you guys have been paying attention to this video, and that's Crabada. But let me explain why I think it could be a good play and why I think it could benefit the most out of this subnet than Avalanche itself. So I think it's the obvious play here because the subnet will burn TUS. So you've got 2 options here. You can buy the TUS token, which is the treasure under the sea token, which will be the gas token of the new network, the Swimmer network, or you can buy crabs and get involved in the game and start farming with these crabs to earn passive income. So those are the 2 options that you have. So let's just look at what happened to DeFi Kingdoms as potentially an example of what could happen to Crabada. Because DeFi Kingdoms was the first example of a game getting its own subnet on AVAX. So if we look at the dual price, pre-subnet launch, which was on the 30th of March, so on the 12th of March, it was $4. The subnet came out on the 30th of March, and literally in the week leading up to it, it pumped almost 3x. You can't see the exact wick on the chart here. Let's see if I can zoom in. But it pretty much wicked up to $12 at one point. So the token almost tripled in the lead up to its new subnet launch, right? The dual token did very, very well. And then it came back down afterwards as the market started dropping. So when I look at this TUS graph and I see it kind of starting to bottom out now, I'm thinking potentially maybe we get some hype coming in when this Swimmer network launches. So the Swimmer network is launching on the 6th of May. So we still have 2.5 weeks to get involved. If we backtrack a little bit from DeFi Kingdoms and go 2.5 weeks before that was launched, we can see that it was $4. So at this point, before the DFK launch, it was $4 and it went to $12. So if we take the same relative point for TUS, we're around here. We're around the 4-cent mark. So it is potentially an option that the TUS token does have a little bit of a pump running up into this new Swimmer network launch. Now, nothing's guaranteed in crypto. I'm just telling you what I'm personally doing because I am accumulating a little bit of TUS. And I always want to be honest and transparent with you guys with what I am accumulating. Because when it gets its own subnet, that means TUS tokens will be burnt. So that is much better for the tokenomics of the TUS ecosystem than it is right now burning AVAX. So I potentially think it could be a good play. And that's one of the reasons why TUS could benefit. And then the other major thing that could benefit is obviously the crabs. Now, Hustle does a great job of covering this in his shows. So make sure you go to the show, I think 3 days ago, in the gaming show playlist and watch that because he gave some great statistics on how to get involved with the Crabada game in terms of buying crabs. But I think that could be an obvious play as well. So personally, what I'm doing, I'm just accumulating a little bit. I'm not aping it and going crazy, but I want a little bit of exposure to TUS and I want a little bit of exposure to these crabs because they're at all-time lows, right? And I always say in crypto, it's a much better getting in at all-time lows than all-time highs. Because even if the TUS token drops from here, it's still a much better risk-reward play than getting in at highs, right? Because it's seeming to bottom out on the charts. So that could potentially be a play for you guys to get involved in. Remember, I'm not a financial advisor. This is for entertainment purposes only. So don't take that as financial advice. I'm just telling you what I'm personally doing as an investor. So if you want to get involved and purchase some of these tokens, you can do so on 1inch, who are one of the other official show sponsors. The reason I like 1inch is because they're one of the cheapest places to trade. So if you want to buy TUS, Treasure Under the Sea, you just switch to Avalanche. They've got multiple networks now. They're on Phantom as well. You can click AVAX and then you can swap for TUS, and you only pay a 0.3% slippage fee, which is still fairly low compared to other dexes, and it's one of the cheapest dexes because it aggregates transactions. So I hope you guys enjoyed the show. I hope you guys learned a little bit as to why I'm a bit concerned about AVAX right now, and also learned a bit about why the technology could still be fruitful long term. But I wouldn't be accumulating AVAX at these levels. I'd be looking at crabs instead. I hope you guys enjoyed this video. I'll see you tomorrow. Peace out.